Welcome to the Deep Dive.
Great to be here.
Today, we're taking a really focused look at the Goldman Sachs Group, ticker GS.
Mm-hmm. Goldman Sachs.
Yeah. We've got their latest stock analysis report, some earnings call info, and our mission really is to pull out the key insights for you, the learner. What's their current standing? Where might they be headed?
And we're aiming to keep this tight, right? Under 15 minutes.
Exactly. Quick and focused.
Oh.
So let's dive right in. Q1 2025 earnings look strong.
Oh, yeah. Definitely strong. I mean, first thing that jumps out is the diluted EPS, that's earnings per share. Came in at $14.12.
13.12. That's pretty hefty.
It is. And net revenues were $15.06 billion.
$15 billion.
Wow. Which, is actually their third highest quarterly net revenue ever.
Third highest ever.
Yeah.
Okay, so where did that strength come from mainly?
Well, Equities had a record quarter, just fantastic performance there.
Yeah.
And FICC, that's fixed income, currency, and commodities, also came in strong. Really solid results.
Okay, equities and FICC driving things.
Yeah.
But wasn't there a bit of a weak spot? Investment banking.
Yeah, that's the counterpoint. Investment banking advisory fees specifically were actually down compared to Q1 last year, 2024.
So how does Goldman explain that, especially if some competitors did better in global banking and markets?
Well, listening to their earnings call, they acknowledge that. They see that some peers showed, stronger growth there.
Okay.
But they seem pretty confident in their own market position. They point out that Q1 last year was exceptionally strong for them, so it makes the comparison tougher this time around.
The base effect. Got it.
Exactly. And they keep coming back to their client relationships, and they see those as a core strength, keeping them steady.
Right. That makes sense. So looking beyond just Q1, what are those core strengths and maybe the opportunities they're focused on?
Well, those client relationships are definitely number one. They talk a lot about that. Plus, their global franchise is strong, leadership positions in different regions, and they've proven pretty resilient, when markets get volatile.
And didn't they do a lot of share buybacks?
They did, yeah. Record share repurchases in Q1. That usually signals management's confidence and a commitment to returning capital to shareholders, something you, the listener, probably want to see.
Definitely a signal. What about longer-term plans? I know they had that efficiency initiative.
Yes. That's ongoing. It's a 3-year plan. The goal is to hit a 60% efficiency ratio.
60%. So expenses at 60% of revenue.
Precisely. Better cost management. They are expecting some related severance charges in Q2, though around $150 million, tied to adjusting headcount.
Okay, part of the plan. Anything else on the opportunity side?
They sound quite optimistic long-term about their alternatives business. They mentioned a large deal backlog there.
Alternatives, right.
And a big one is the plan to significantly wind down their historical principal investments of the HPI portfolio.
I remember hearing about that.
Yeah, the target is by the end of 2026. That should free up a fair bit of capital.
Freeing up capital likely for more shareholder returns or strategic investments.
That seems to be the idea. Oh, and one more thing. Their projected full-year tax rate is around 21%. That's relatively favorable.
Okay, so some clear strategies in place. Efficiency, HPI reduction, focus on alternatives. Seems like they're trying to position themselves.
Definitely looks that way. And, the analysis we saw pegged their fair value estimate somewhere around the $520 mark. $519, $523, depending on the section.
And the share price recently has been, around $530?
Yeah, somewhere in that ballpark. So potentially slightly below that estimated fair value, which, some might see as an attractive entry point for a long-term view.
Potentially. But every investment story has two sides. What about the risks and challenges facing Goldman?
Absolutely. The big cloud hanging over everyone is macroeconomic uncertainty.
Yeah.
That could really hit deal flow, particularly for investment banking.
Makes sense. Slower economy, fewer deals.
Exactly. Then there are the international risks, cross-border uncertainties, global policy shifts. Those could impact international revenue specifically.
And competition isn't exactly easing up, I imagine.
Never does in this space. It's always intense. Plus, that HPI reduction plan we mentioned. While it sounds good, there are execution risks. It's a big portfolio to unwind.
True. You can't just snap your fingers.
Right. And management themselves have kind of flagged Q2 2025. They use the phrase markedly different operating environment, suggesting slower deal-making ahead.
So acknowledging the near term might be tougher.
Seems like it. We've even seen recent news reflecting that mixed some reports highlighting potentially good trading revenue because of, say, tariff uncertainty, but also CEO warnings about a challenging environment overall.
A bit of a mixed message there.
It is. And then there are some investor concerns bubbling up around the supplementary leverage ratio, the SLR.
Ah, the capital requirements.
Yeah, basically how much capital they hold versus assets. Concerns about whether that might constrain how they deploy capital, like buybacks or dividends, going forward.
Okay, so definitely some headwinds to watch. Macro, competition, execution risks, and maybe some regulatory capital stuff.
That sums it up pretty well. It's not all smooth sailing.
So given this picture, strong Q1, but maybe a tougher Q2 and ongoing risks, what are the analysts saying? Have they been changing their tune?
There have been quite a few recent adjustments, actually. Let's see, RBC Capital lowered their price target to $560. Wells Fargo also trimmed theirs down to $650.
Okay, contributing.
And Morgan Stanley actually downgraded the stock back in early April to equal weight with a $558 target, though interestingly, they'd lowered their target earlier in March too.
Any upgrades or positive moves?
Well, JP Morgan raised their target back in late March up to $625, but Citi lowered theirs around the same time to $550. And further back, last October, Oppenheimer, Jefferies, Evercore, Barclays all raised targets.
So quite a mix recently, but maybe leans slightly more cautious with those recent downgrades and trims.
It seems that way, yeah. But if you look at the average price target from analysts over the last 6 months or so, it comes out around $600.33 to be exact.
$600.
Yeah.
Okay, so compared to the current price, which we said was in the low to mid 500s.
Right. That average target still suggests some potential upside from where the stock has been trading.
Interesting. So let's maybe pull up some key financials just to ground this. TTM means trailing 12 months, right?
Correct. Looking back over the last year.
Okay. Market cap around $164.5 billion. Revenue, $53.5 billion.
And net income, about $14.3 billion.
Forward EPS, that's the expectation for the next year, is around $44.78.
Yep, which gives it a forward PE ratio of roughly 11.8.
11.8, and they do pay a dividend.
They do. Yield is about 2.2%, annual dividend of $11.75 per share.
Okay. And just briefly, that big revenue number, it comes from different segments, right? Like investment banking, global markets.
Exactly. Global markets, which includes that strong FICC and equities performance we mentioned, is usually a huge chunk. Then investment banking, asset management, and consumer and wealth management make up the rest. The exact split varies quarter to quarter, obviously.
Right, right. Okay, so let's try and summarize this quick dive. Goldman Sachs, strong recent performance, especially in trading, that's clear.
Definitely. Q1 was impressive on that front.
But they're facing some headwinds. Macroeconomic uncertainty, competition, especially hitting the investment banking side.
And potential execution risks on their strategic plans, like the HPI rundown. Plus that warning about a tougher Q2.
Analyst views are a bit varied, maybe tilting a bit more cautious recently, but that average target still points upwards.
Yeah, around $600. And those long-term plans, efficiency, HPI reduction, those could be real value drivers if executed well.
Okay. Now, really important for you, the listener. Remember, this is just our analysis based on the documents we looked at. It's a snapshot.
Absolutely. You really need to do your own homework, your own research before making any investment decisions, especially with a complex company like Goldman in a tricky environment.
Which leads to, I guess, a final thought for you to consider. You see these strong recent results, record buybacks, but also clear warnings about a tougher environment ahead.
It's that classic tension.
Yeah. So how would you personally weigh those factors? How would you strategize if you were considering an investment in a firm like Goldman Sachs right now? It's not a simple call.
It really isn't. Lots to think about there.
Indeed. Well, if you found this focused analysis helpful, if you appreciate these kinds of deep dives where we cut through the noise,
We hope you did.
please consider supporting the channel. Subscribe, hit that notification bell. It genuinely helps us create more content like this, breaking down complex topics.
Your support really does make a difference.
Thanks for joining us on the deep dive today.